With Zaner Ag Hedge bringing you today's market update for July 8th, 2022. Soybean futures have continued with strength since the lows earlier this week, and so far into today's candle have traded higher highs and higher lows for the second day running, beginning what could be considered the early stages of a trend higher. Chinese daily and soybeans were up 0.3% overnight, soy meal up 1.6%, and soy oil up 3.26%. Malaysian palm oil was up 0.5% in overnight trade. For the USDA supply and demand report due out next week, traders see soybean ending stocks near 211 million bushels as compared with 280 in June. World ending stocks are expected near 99.37 million as compared with 100.46 million tons last month. Trade expects to see Brazil production coming in at 125.86 million tons, only slightly down from the 126 million in June's estimates, with Argentinian production expected at 43.32 million tons as compared with 43.4. U.S. soybean exports for the month of May reached 89 million bushels from 134 million in April, but up 80.4% from last year. This morning, the USDA announced their weekly export sales figures for soybeans, a disappointing net sales reduction of 160,000 metric tons for 21-22, a marketing year low. Were up 33% from last week, but down noticeably from the four-week average. Net sales of 240,000 metric tons for 22-23 were primarily for unknown destinations, and export inspections of 504,000 metric tons were down 3% from the previous week and 5% from our four-week average. August soybeans trading 14.87.5, that's up 2 cents on the day, with the November contract trading 13.72 even, up 6.5 cents on the day. Corn futures also maintained their strength overnight, although did not follow through to new intraday highs until after the open this morning, and but remained positive in the overnight session. Chinese daily in corn was up 0.6%. A shift to drier forecasts may be providing support, with the 6 to 10 day forecast model showing below normal temperatures in the eastern corn belt and above normal temperatures moving into the western belt. Precipitation is expected to be below normal. The 8 to 14 day forecast model shows that for much of the corn belt, above normal temperatures with below normal precipitation. For Tuesday's USDA supply and demand update, traders see corn ending stocks coming in at 1.442 billion bushels as compared with 1.4 billion bushels in the June forecast. World ending stocks are expected to come in near 310 million tons as compared with 310.45 million in the June update. Little change there to the world ending stocks. Trade expects to see corn production near 116.47 million tons, a little higher than the 116 million ton estimate in June, and Argentinian production a little lower here at 52.38 million tons as compared with 53 million tons in June. Ethanol production for the week ending July 1st averaged 1.044 million barrels a day. That is down 0.67% from the previous week and 2.16% from a year ago. Total production for the week was at 7.3 million barrels. The amount of corn used in last week's production is estimated at 106 million bushels. Corn needs to average only 95.4 million bushels to hit the USDA forecast for the ethanol crush. In this week's USDA export sales figures for corn, net sales reductions of 66,600 metric tons for 21-22, a marketing year low, were down noticeably from the previous week and from the four-week average. Net sales of 111,000 metric tons for 22-23 were reported, and all against export inspections of 1.02 million metric tons were down 18% from the previous week and 21% from our four-week average. September corn trading 6.22 quarter, up 13.25 cents, with December trading at 6.10.5, up 14.25 cents on the day. In our wheat market, September wheat has begun to find a footing after a test below $8. Price action has made a second day of higher highs and higher lows from this week's low, with momentum indicators also finally starting to pop out of oversold territory. The Buenos Aires Grain Exchange lowered their wheat planting estimates to 6.2 million hectares as compared with 6.3 million in the previous report. Dry weather conditions to cause the adjustments lower in plantings, which are now down from 6.7 million hectares last year. Traders see all wheat production coming in near 1.745 billion bushels as compared with 1.737 billion bushels in next week's WASDE reports. Traders also see spring wheat production coming in near 458 million bushels. All wheat ending stocks for 22-23 season are expected to come in near 638 million bushels as compared with the June estimate of 627 million bushels. World ending stocks for wheat expected to come in slightly under the figure at 266.26 million tons as compared with 266.85 in June. In today's USDA weekly export sales figures for wheat, net sales of 286,000 metric tons for 22-23 were reported, with export inspections of 287,000 tons. Chicago wheat trading at $8.73.5, up 37.25 cents on the day, with KC hard red winter trading $9.20 even, up 30.75, with Minneapolis spring wheat trading at $9.77.25, up 42.75 cents on the day, all in the September contracts. In our cattle markets, August cattle closed higher in the session yesterday, trading outside the prior day's range, but closing back within. With a clear lack of direction from cattle futures, all eyes are on the cash markets and beef prices to see if they can help the futures out of this range. Average actual dressed cattle weights for the week ending June 25th came in at 811 pounds, up from 808 last week and down from 815 a year ago. The 5-year average weekly weight for this week is 810.8. Actual beef production for the same week came in at 537.8 million pounds, up from 537.1 million a year ago. The USDA beef production is seen coming down to 430 million pounds from the third quarter to the fourth quarter of this year, as compared with an increase of 127 million pounds last year. This is the largest decline since 2008. Cash live cattle trade are leaner and softer this week. In Kansas on Thursday, there were 7,715 head reported at an average price of $137.44 versus $138.48 last week. In Nebraska, 10,000 head traded with an average of $147.26 versus an average of $147.36 last week. And in Texas and Oklahoma, 7,300 head traded at an average price of $136.97 versus $137.55 last week. The USDA box beef cutout closed 2 cents higher at $268.07. That's up from $264 the previous week, and the highest the cutout has been since June 27th. The USDA also announced all export sales for beef this morning. Net sales of 11,000 metric tons for 2022 were down 35% from the previous week and 30% from our 4-week average. Export inspections of 20,400 metric tons were up 3% week over week. August live cattle trading at 134.87.5, up 0.3 of a point, with August feeders trading 173.37, up 0.8 of a point on the day. And last but not least, today in the hog markets, August hogs traded to their highest levels yesterday since April 29th, but failed to see follow through of their multi-month range highs and fell back to close within the prior day's range, erasing what might have been considered a positive technical development. U.S. pork production normally increases 50 to 200 million pounds for the second quarter to the third quarter, but this year, third quarter production is expected to be 115 million pounds lower. This is the second biggest decline on record. USDA pork cutout released after close came in at $110.12, up 36 cents from Wednesday and up from $104.87 the previous week. And in this week's export sales figures for all pork, net sales of 31,200 metric tons for 2022 were down 3% from the previous week, but up 23% from our 4-week average. July lean hogs trading 113.10, down 1/8 of a point on the day, with August hoggy trading at 109.25, down 0.5 point on the day. This has been your morning market update, brought to you by Zaner Ag Hedge. For all things trading and commodity risk management related, a member of the Zaner team is available to discuss trade plans that are right for you. Give us a call at 312-277-0110. That's 312-277-0110, or find us on the web at zaner.com. You can also join me daily for our Strategy of the Day live streams right here on Facebook, or sign up in the links below to receive the free Zaner Daily newsletter to get our entire team's analysis of current market conditions. Do try to sign up for that free Strategy of the Week webinar held every Thursday at 2 p.m. Central. Sign up links are in the information section of this video, and where I cover my own actual trading strategies and some of the analysis behind them. Have a great day, everybody, and we'll be back with you as price action develops.